This whole big Ponzi scheme is coming to conclusion. And it's interesting because what I found is the yield curve has inverted. Now, many of you out there, especially if you're new, you don't even know why this matters to you and why it's important. So let me show you the pattern shift. But the markets tremble at the Fed's unprecedented double-edged tightening. They haven't done anything yet, right? They're just talking about doing something in March. This is all garbage rhetoric, and it's going to be interesting. I mean, they're going to have to raise rates, and they're going to have to run off their balance sheet because otherwise they lose all credibility. We've got an early warning signal, and you need to take it really seriously. I'm taking it really seriously. You can tell I am not happy. I am not happy at all. Okay, making this task trickier, right? Raising rates, running off balance sheet. The Fed has only scaled back its stockpile of bonds once before in 2017 to 2019, and we know how that ended, right? The repo markets, the money markets froze. You didn't see it because they papered over it with a whole bunch of, of QE money printing. That's why you didn't see it. But it happened, period, September. So they can't do it. They cannot do it. It's worse now than it was then. They cannot do it. I don't give a crap what anybody says. Can't do it, right? So there's not much to go on to try to calculate the impact of a bigger, swifter quantitative tightening. That means instead of this, they're doing this, okay? Quantitative tightening this time around. Yeah, right. This is all a big flippin' experiment, and we're the guinea pigs. Because we are not too big to fail. I think we should have all noticed that. Will the central banks really risk popping the bubble that they created? When they talk about fighting inflation, if I could reach through the screen and strangle them, I would, because they are lying, lying, lying. Look, I don't know if karma is real or not. I like to think that it's real. And if it is indeed, I'm glad I'm not a central banker. That's what I could say. I'm glad I'm not a central banker because I cannot stand these guys. They lie, lie, and lie. When you hold physical gold, physical silver, you're holding it. I hold it. I own it. There is no counterparty risk. Because I'm thinking, seriously thinking, that this next recession could absolutely trigger the looming hyperinflation. All that money that's been held in the markets, it goes someplace. Wealth never disappears. It merely shifts location. My goal for everybody watching is to have that wealth shift your way. And you do that by understanding. You don't have to know, or have the experience that I've had. If you can learn the patterns that I'm trying to show you in all of my work, certainly not just today, then when you can recognize those patterns and you can also learn how to define the true value of any asset or instrument, I call that the fundamental value, because at some point that's where it's going. That's what happens to every asset. It goes toward its true value. If you can know those two things, nobody can pull the wool over your eyes.